welcome to another fabulous episode of doing math stuff. We're moving on. So we finished looking at all of our data stuff. So if you looked at, you can always look at our review stuff if you want to go back. But we looked at all of our data stuff, so we just finished bar graphs, dot plots, frequency tables, stem and leaf, scatter plot, all that stuff. We are now moving on to financial literacy. And day one, what is a budget? So first off, financial literacy basically is talking about being able to understand finances. One of the things that almost every adult has to do is manage finances when you get older. So this math is very much something that you're going to do in real life. So some of the stuff that you do in math doesn't happen every day, but financial stuff happens pretty much every day when you become an adult. So we're going to start off with what is a budget. A couple things for this week. We're going to figure out what is, or for this unit, we're going to figure out what income tax is, payroll tax, sales tax, property tax, the difference between gross income and net income. We're going to learn how to balance a simple budget. We might talk about how to balance a budget, and identify the advantages and disadvantages of different types of payment, including check, credit cards, debit cards, electronic payments, and then developing a system for keeping and using financial records. So that's a lot of words to say. We're going to figure out some stuff about money. All right, so what is a budget? What do you know about budgets? What do you wonder? So a budget, people have budgets, countries have budgets, schools have budgets. Basically, a budget is kind of figuring out how much money you have and how much money you have to spend, and if you have enough money to buy all the things that you need. So a budget's made up of two things: income and expenses. So income is the money coming in. So kind of if you flip the word income to backwards, it's come in. So it's the money coming in. So income, anytime you earn money from your job, anytime you earn money from basically anything, that's money coming in. That is income. So any money coming in is the money that you are earning. Also could be from gifts and things like that. So if you have a job babysitting and then your grandparents give you $100 check for your birthday, both of those are examples of income. Expenses are when you are spending money. Money is exiting your account. Expense, exit. So expenses are the things that you are buying. So that could be things that you want or things that you need. So food like breakfast, lunch, and dinner is a need. Having Takis for a snack is a want. So there's differences between needs and wants. Some things you absolutely need to survive: clothes, food, house. Some things you just want: video games. Um, and so you need to take care of your needs before you take care of your wants. So a paycheck, when you get a paycheck, that is income. When you pay for groceries, that's an expense. When you pay for daycare, that's an expense. When you pay for a cell phone, that's an expense. When you earn allowance, that's income. When you get birthday money, that's income. Lunch money, you're spending it. I don't know what that apostrophe is about. Going out to eat, that's an expense. Purchasing Robux, that's an expense. All right, so two of these, allowance and paycheck, were income. The rest of them were expenses. Three of them. Sorry, birthday money is also an income. So paycheck, allowance, birthday money, all income. Hey, piggy bank. So imagine you have $200 for the next 2 weeks. You need to save $75 to buy a bike. You spend $3 a day on lunch at school. You spend $10 a week on video games. Your friends invite you to Urban Air. It costs $50 for an unlimited pass. Will you have enough to go? So all you have to do is total up all of your expenses, and if your expenses are less than how much money you have, then you're good to go. If your expenses are more, then you have to adjust your spending.